And Joe Biden's southern sweep boosting stocks this morning, a day after the Fed cut interest rates by 50 basis points in a rare emergency move. And now President Trump is proposing yet another idea to help curb the damage from the coronavirus. Let's discuss. Doug Flynn from Flynn, Zito Capital Management is here, along with Craig Dismuke, chief economist at Vining Sparks. Gentlemen, good morning.
Good morning.
All right, what a day. Doug, you first. Is this a Biden bounce or is it something else?
I think it is a little bit. The market was definitely not liking the idea of a Sanders potential move ahead. I talked to a lot of people on both sides of the spectrum politically, and even hardcore Democrats were not really keen of that, especially if you have any money invested whatsoever, which is about half the population. So I think that this bodes well to getting back to, all right, he's the establishment guy. We know what that looks like, and the market likes to know what things are happening and likes a little bit more certainty.
Yeah, investors don't want that socialist revolution.
No, they don't.
Stocks might be rallying this morning. Of course, brace yourself for volatility. This doesn't mean we're ending higher. But if you take a look at the 10-year Treasury yield, that continues to fall. Is that concerning to you, Craig, and why?
Well, it's a bit of a concern, sure. The 10-year yield reflects the feeling of risk in for the investors, and yeah, it's dropping below 1%, all-time lows. The 30-year at all-time lows. The 10-year was down 30 basis points, almost 30 basis points intraday yesterday, and so it just reflects the amount of fear that's in the market right now, the amount of fear that the coronavirus has caused, and the potential for an economic slowdown in a pretty significant way.
Craig, let me jump in again here, though, because, this emergency rate cut by the Fed, perhaps another cut in 2 weeks, a change in monetary policy, making rates cheaper, doesn't get people to get on a flight to Tokyo or a flight to Italy. So what exactly can the Trump administration and the Federal Reserve do to help, protect the U.S. economy in the short term?
Sure. So that's right. It doesn't affect the outbreak of the infection of the virus. What it does is two things. There's two battles going on right now. One is for consumer confidence. The Fed move doesn't really affect consumer confidence other than boosting asset prices. The second battle that's going on right now is for business confidence, and that's what the Fed cutting rates helps with business confidence. The second issue, and the second reason I think why they should have cut, is because the curve was so inverted. There was so much fear out there that had they not, I think the results would have been disastrous. Going forward, I think it needs to be accompanied by fiscal stimulus. If you go back to the ARRA, in the aftermath of the Great Recession, they boosted stimulus, $260 billion that they did with tax credits, tax cuts, increased unemployment benefits. And so I think something like that would have an actual impact for the consumer. And so I think they need to move forward with something along that line as well.
Doug, do you agree that rate cuts boost corporate confidence, and also this idea that maybe we get a one-year payroll tax cut? Would that help?
Well, that might help a little bit because that goes directly down to the average person's paycheck. The more I look at this, the more it just seems like Trump wants what Obama has or had. He had low interest rates. He had the payroll tax cut himself, actually, for a period. So he just wants everything, the wind at his back at every turn. So that's why immediately after they cut rates 50 basis points, he came out and said, can I have another 50? I mean, that's basically, he wants to put everything behind the wind in his back. I think it helps a little bit, but I don't think we need to cut. I think that there's a lot of confidence. People are feeling better than they ever have. They have more money in their pockets, so things are good. I don't know that it's necessary, but because I'm worried about what we have left after if we get down to zero.
Right, and of course, let's say Democrats do say, fine, you get your payroll tax cut. It's all temporary, and possibly, Doug, that interest rate cut could be temporary too, because who's to say the Fed won't say, you know what, everything's fine, we're gonna cancel the cuts and raise rates.
That's true, except that I think people refinancing and that kind of thing is actually really good. There's rates at 3 or even below 3% on long-term mortgage rates, which is just unbelievable. So perhaps that's a big plus too.
And I thought I got a good mortgage rate. All right, Doug, Craig, thanks for joining us this morning.
Absolutely.
Thank you.